And we are live. And a good morning to everybody, and welcome to Behind the Markets, the Tuesday edition. It is Finance Tuesday. Good morning to you, Vernon. And how are you doing today?
We're doing great, thank you. How are you doing today?
No, we're good. We're good. We're good. It's a kickoff day. It's start off day. It is as I said. It's today we talk about money. Yesterday we talked about mindsets. We were trying to get people away from what we call the chicken mindset, to start thinking more about being brave and stop trying to shoot down people who try to be brave in this country. And it's something that we should actually battle on. There's an old video, Vernon. It's actually quite shocking. There's an old video of a Ku Klux Klan member, and I think we all know those are hardcore racists. And they asked him, and he said, the best thing I can ever do, and he says these words, these are quite harsh, so avert your ears if you get triggered very easily. He says, the best thing I could do for blacks is just to let them continue doing what they're doing. He says, I would just drive up to every ghetto in America and leave a bunch of guns and alcohol and say, have at it. Continue. Because he says, look, nobody's doing a more effective job of destroying themselves than of destroying black people than themselves. So why should we interfere? Those are harsh words to hear, but unfortunately, Vernon, we cannot dispute them so well. We know that we are our own worst enemies. In fact, whenever somebody tries to get up, we are the only group of people, or not the only group of people, but we're known for it, people. Okay, someone makes it amongst us, we call them a Satanist. Okay, now I don't. We jump to that conclusion because for us, and I think Dumisani points this out in his book, poverty is normal for us. We have normalized poverty to the point where the moment somebody tries to make it, we have to pull them down. We have to. They're just not allowed to get anywhere. And I'm going to share something I wanted to share yesterday, which I think we just missed out on before we get started today. And this is, what's his name, Vusi Tembekwayo, who was talking about the most effective destroyers of our people. And I think what's the name? We talked last week about Dumisani, who said, look, unfortunately, we become our own poverty carriers as people. We carry our own poverty, and that's the
Yeah.
unfortunate thing. But here's Vusita McGuire actually talking about it in a simple clip.
The project about apartheid wasn't convincing white people that the apartheid didn't lose, apartheid won. The project about apartheid wasn't convincing white people that they were better or black people that they were worse. The project of apartheid was convincing black people that none amongst them was good enough. So let me tell you something. When you make it as a black person, you don't need white enemies. Black people will show you.
And that's the truth. But then let's say it like it is. I don't know if I've lost Vernon there, but let's say it like it is and not like it was. You make it. It's not going to be a bunch of foreigners who are going to come and take you down. You'll say it is. In fact, let me be honest with you. People who say, "Oh no, the system is mainly these foreigners are the ones who are destroyed," are the ones who are not doing anything anyway. Okay, the ones who get taken down a lot, who really have got like a tangible case of themselves getting taken down, got taken down by their own people. Okay, they got thrown under the bus by their own people. They got left to hang out by their own people. Sorry, Vernon, I think we're getting some feedback here. Right. Sorry, I think we've lost Vernon for a little bit because I think we're just getting some feedback here. So yes, they got thrown under the bus by their own people. So unfortunately, he is making a very strong point. If you have any views on that, please share that with us in the comments section. But unfortunately, we have been the victims of our own self-hatred. We have been a victim of our own self-questioning. We have been a victim of our lack of belief in ourselves. And as a result, what tends to happen is that we tend to destroy everything we tend to build, or those who tend to make a step forward, we tend to destroy that. So anyway, that's just something that we all have to think about, that if we're going to build a nation, we are going to have to stop destroying. We're going to have to stop the pull him down mentality. We're going to have to stop, romanticizing being a hater. We're going to have to stop that. because that is what perpetuates the poverty. Sure, people will laugh at you. Sure, people will pay attention to you. Sure, it'll give you a few laughs and kicks for the moment. But unfortunately, that mentality will not take a nation that needs to pull 90% of its population out of poverty. It will not take that nation any way forward. And I'm just putting that out there. And I think Vusi was trying to point that out earlier on. And he talked about it as well when he was trying to build a hub. He said it wasn't the white Afrikaners who came and destroyed him, who put him down. It was the black people in government, in offices, who put roadblocks in his way. It was them. It's not some force of European conglomerate that'll take you down in your business. It is the fellow Zambian who has the same skin color as you, who speaks a similar language to you, who works in some government office or some regulatory office or something, who just decides you don't deserve to be wealthy. Who on earth told you you can? And they've decided they're going to shut you down. Okay, it is us. It's all of us who decide that we have to destroy each other. Now, obviously, if somebody's doing things by crooked means, by all means, step in and try and make sure you're protecting the public. But the problem is the intent to which a lot of people regulate industries in this country is not with the intention of protecting the public. It's with the intention of making sure only a select group of people are wealthy. That is what the job they are. They have there's a lot of malicious behavior that comes about it because they don't want to stand by these people in industries and grow with them. Right, but well, I was actually literally going to ask Vernon what your thoughts are, but he just jumped off. But anyway, so let's get into today's show. We'll start the show as it is. Today is Finance Tuesday. Let's get into some of the data that we're opening up, and I'll get Vernon's thoughts on that at another time. And that actually appears we've gotten Vernon back. Right. So Vernon, what are your thoughts on as I said, on the hater culture and trying to make sure we move away from that?
I think we probably have got to identify why we do that first. Just earlier yesterday we were talking about how Yomaps was able to do what he did, and later on in the day, I met some colleagues and some lads, and they were saying the stadium was empty. That guy didn't do as much, And I went down on social media just to read some comments on the same, and people were like, this guy didn't do much, and some actually in the comment section were like, he was able to at least put up a stadium as much as you want to call it half the stadium. Some of you even failed to organize family meetings, but you're busy arguing with someone who put up a whole stadium as much as it wasn't as full capacity, but of course it was full. There were a lot of people even on the ground and whatnot. We just would have to realize what we're doing, because it's been the tradition, it's been the norm, it's been the culture of doing the same. And this is why I remember one person, we were stuck in traffic at some point, and all of a sudden just started a conversation saying, sometimes people report you to the authorities because they just feel like you're doing better than them, and you should not be doing better than them, and retaliating on such sentiments. And he says, I was once called by an authority saying I violated the offense at some point, I mean the law, and I retaliated because I know some people hate me. It may sound ridiculous and very, without any ground or standing, but sometimes this is the scenario. This is just how things look like. Some people start fighting you just because you're black, and you're black just like them. But at the end of the day, so all of these sayings like divided we fall, together we stand. Then what are we doing? Why do we keep mentioning them? We're a family. We're all black. You want to unite with white people who equally have their own agenda, and we are always pulling back on them, saying they're bringing us back. Look at how foreign investors have been pulled down next because they're trying to invest in the country. How, if we are going to run the country ourselves, are we going to proceed? Are we going to succeed? Is there going to be any progress? Because if we have this mentality of trying to shut you down, Munyumba, you probably have a hedge fund, and I see you're doing fine. You are the top in the country. I come and try to tear you apart because I'm in the regulatory seat. Then allow those people, the ones, to continue, because them you want to eat from them, so you allow them to proceed and also do favors for them because you are in uniform maybe and whatnot. But why won't we allow our own brothers and sisters in the very same skin tone as ours proceed and grow? At the end of the day, whatever monies they make in profits will still be returned in our local economy. I don't understand what really the mentality is, and I think we need to understand where it came from so we can be able to work around it.
You know, there's a book I'm reading, Vernon, called "The Power to Change" by Pastor Craig Groeschel, mastering the habits, and he does it from a spiritual perspective. But in the first chapter, he says something quite profound. He says, "You do what you do because of what you think of you." Okay, so he said the everything you do. So if your job is to go around hating on people who look similar to you, what does it say about what you think of you? You pull people down who are of a similar skin color to you because of what you think of you. That's what you do. Now, yes, guy could have had a 50% capacity stadium. Stadium, people, not a classroom. Stadium, okay? Stadium. Do you know how hard it is? I really I challenge any person. Here's what I challenge. I challenge any person who has something to say about it not being 100% full to go and fill up that stadium themselves. How about you put your money where your mouth is and you go and do it yourself? Okay? You wanna be the top dog, you wanna have something to say about it, go beat it. If you can't beat it, perhaps respect it. That's, I think, where we need to start drawing the line as people. Okay? If you cannot beat what somebody can do, perhaps stay away from being a critic of it. Because you're literally just spewing venom now for no reason. If you can do it better, show us. That's what I would say. Go out there, use your own resources, and go out there and go and do it better. And in fact, you know what happens if you do that? The economy grows. If people start taking that attitude towards things of if I can do it better, I'm going to go and do it better, and actually going out there and competing, we have a free market, we have market competition, we have job creation, we have all sorts of things. So that is what I wanted to try and push as the mentality here. Instead of us trying to take shots at each other and constantly saying, you're not doing this right, you're not doing that right, you're not doing this right. My suggestion is go out there and do it better. I have plenty of people in my industry, Vernon, who operate in financial education, who operate in advisory services. I'm not out here trying to spew venom on them. Okay. Why? It's simply because if I think there's something I can do better, I'm not out here telling you about how bad this person is. I'm on my computer and on my desk making sure that I'm making something better. That is what I'm trying to do. Okay. And I used to have that attitude. I'm not even going to act like I'm a saint here. I used to have that attitude of going out there and trying to fight for no reason. And then I came to the realization that life only gets better not when people fight in public, but when people fight to make things better. And that is what's his name? Pastor Tony Evans said at the funeral of his wife. He said, pick your fights wisely. Fight for things that are beneficial. Do not fight with each other for no reason. Okay, because at the end of the day, and he was reading that verse by Peter, by Paul in the Bible, he says, I fought the good fight. And he's saying, fight for things that are beneficial. So if your fight is going to be about, little guy Philip, no, he didn't. Yeah, I've got a picture. I've got a picture. So, okay, you got a picture. So what? What have you achieved? Nothing. You haven't made it in life. You haven't made anyone's life better with your picture. You haven't improved anyone's life. You've just shown people how petty you are. Okay? So the best thing you can do is to go out there. If you can do something better, actually go and do it better. Because guess what? Zambia will benefit. More jobs will be created. More economic activity will happen. More poverty will be alleviated if you actually go out there and do things better. If you can't do things better, perhaps focus on the things you can do better. Okay? Leave aside the things you can't do better and spend your time focusing on the things you can do better because this country needs people who are actually going to roll up their sleeves and make things better, not people who can debate. I understand that we want to value the skill of debate is useless, okay? Not to a poor country. To a rich country, maybe. Debate is a wonderful thing when people have wealth and they want to secure it and they want to make sure it's there. But you have nothing. Okay, you can't even put water pipes in homes. We can't even get electricity to houses. We can't even get sewage cleaned up. Garbage is piling up in areas. All right, why? Because nobody can do anything, and everybody's waiting for the government to come and fix it. That is where the problems are coming. Okay, so perhaps if we all just concentrate our energy on making things better, life may actually get better. And it's time for us to start trying to applaud people. Okay, chapter 1 of this book, what's it called? This one. It's a classic. How to Win Friends and Influence People. Chapter 1 actually talks about the fact that criticism doesn't do anything. In as much as all criticism does, Vernon, is just make us look smart. That's all it does. Okay, it just makes the criticizer look intelligent in public for a few seconds, and the world moves on to something more important. Okay, but he's saying that look, you can catch more flies with honey than I think I was trying to say you can catch more you can do more good with compliments. Okay, yeah, it says you can catch more flies with honey than vinegar. That's the old saying. You can catch more flies with honey than vinegar, and you can do more good by trying to applaud the good. So the guy gets a 50% stadium full. It's not 100%. Cool. That's 50% more than anybody else has ever done. So can we at least all just applaud that? Okay. Can we come behind this and applaud that? You're all saying, let the Zambian youth have a chance. A Zambian youth went out there, did something that not even international artists have done in Zambia. They've struggled to do that. And he went and put his neck on the line and did that. Okay. How many resources he had to put together, how much he had to work to do that. He put everything on the line to go and do that. He put his name on the line, his neck on the line, his everything. Why can't we just what is ingrained in us as people? What is wired here that we just have to have hatred towards one another for that? Okay. Now, I'm saying again, if somebody's a criminal in society, sure, that needs to be resolved. But can you point out the crime to me in that area? Can you point out the crime in someone having ambition? And you know what it boils down to, Vernon? We do what we do because of what we think of ourselves. That is a result of our personal inferiority. How dare that guy with black skin try and fill up a stadium? Okay, we don't do such. We sit and wait for investors and people to take care of us. We sit and wait for master to come from a boat or from a plane to come and bring wealth to take care of us and to give us scraps. That's what we do. We don't aspire. We don't do well. We don't do. That's the mentality. That's all I can hear when that is coming out. Okay, and yes, you can point it out. Like I said, still a whole lot further than any of us have gone, and that's worth applauding. Right, Vernon. Before I go deep into that one and stay in that area, let's get into today's data and conversation. Right, today we're going into Finance Tuesday. Let's get into the market roundup. We have seen that our currency is currently sitting at about 19.36, up 0.35%. That's where the dollar is. And dollar's up 2.31% on the month and 9.4% on the year, back up at 6.98% year to date. So we are seeing a strong dollar coming around that is in a buying posture and has continued to move in a buying position. We also are seeing that the stock market yesterday did hold still, down 0.3% on 7 days and up 1.6% 30 days, but up 11.03% year to date, 8,147. That's where the stock market is sitting. Bond market was up about 0.05%. We'll be giving you the results of the auction last week and the analysis of auctions as they've been going on. 0.29% down in terms of against US dollars. As you can see, the 0.35% movement in the dollar upwards versus the 0.35% movement in the bond index shows you that the net off effect is that the US dollar investors. So one of the things I was pointing out yesterday is that when the kwacha is strong, the offshore investors need a dual strategy. And I call this having a more anti-fragile strategy. The offshore investors, especially in Zambia, should actually be pouring their money into property and bonds. That is their best return asset. However, I would always align to them that when the currency is strengthening, buy more property. When the currency is, buy more bonds. When the currency is weakening, put more of your money into your property. That's one of the reasons why we see an increase in the remittance rates in Zambia, especially when our currency gets weaker. One is because gig workers are cheaper. Remember, I talked about, let's say someone's a graphic designer and they're charging 3,200 kwacha, and the dollar was at 16. Their work would be $200, but when it's at 20, their work is $160. So the outsider is saying, oh, that's a 25% discount. The Zambian is cheaper to go with. Without changing their price, it was just merely the FX rate that actually worked in their favor. While simultaneously, it's also got to do with the Zambian outside, whose building project has gotten lower in the currency they're earning in. So remember, a Zambian in America is earning in dollars. A Zambian in Botswana is earning in pula. A Zambian in South Africa is earning in rands. So when the kwacha gets weaker across all currencies, that Zambian is seeing their building project getting cheaper. and as a result, they're able to liquidate it for a lot more. They're able to invest in it and get it done with at a cheaper cost to what they're earning in. So that's a very important differentiation. So that is one of the reasons why we keep seeing that. Now let's take a look at even against the Rand. We did see the Rand go strong for a little bit and then lose a little bit of strength. Rand is down to 0.98 against the Kwacha. And then it bounced back up yesterday just for a little bit. But Rand is on the month-on-month basis, the Rand is up 2.49%. Remember, I said this can start to affect cross-border trade a little bit. Didn't seem to do so in the last read, but we may start to see it do so going forward. Against the dollar, we are seeing that uptick slight against the dollar. There's a little bit of deceleration in both of them. So you're starting to see that slowdown and deceleration starting to happen. Now, in terms of the bond index, we're up 11.15% year to date in bonds. And 3.9% in US dollars in Zambian government bonds. The composite interest rate is up to 24.04. So it did tick up a little bit, signaling some sell-offs in bonds happening on the secondary market. So if you are holding bonds at the moment, there's a little bit of selling happening on the secondary market. So to offload your bonds on the secondary market means they may be a little bit cheaper. So you may want to watch out for trying to sell now. But also, this is a time if you miss the auction and you do have a good relationship with your bank. That's a big if, people. Big if. If you do have a good relationship with your bank, it's a good idea to go and try and see if you can scoop up a secondary bond. All you have to do is make sure you know the price. This is why a lot of the people who I work with, I make sure I give them calculators so that they can calculate what price they should be getting for a bond. So that whenever their banker tells them, this is the price you pay, measure it against the calculator that we always put against you to say, that is the price I'm actually supposed to be getting. And so it's advisable to go to the auction. Okay, it's advisable to go and get your bonds from the auction, but should you have missed the auction and you're unable to, and the reason I say this, Vernon, is a lot of people do point out the fact that when they're holding on to lots of money, they're worried that they'll finish it. If you're holding on to, let's say you've just been paid your pension from your old workplace, you're trying to transition, you've got a couple of 100,000 sitting in your bank account. You need to make sure that's gone into an asset as quickly as possible. Perhaps waiting for the next auction, you're worried that all of a sudden some family need will pitch up, or some desire here will pitch up, or some special will come, or a bunch of concerts will pitch up over the weekend. And now all of a sudden you've got hundreds of thousands sitting in your account, and you've decided that you're going to be the baller of the session. The best way to prevent yourself from spending money that is meant for your retirement and your investment is to actually allocate it as quickly as possible. So if you're trying to get your bonds, go onto the secondary market if you can, but make sure you go there knowledgeable. If you go to the secondary market without knowledge, you will run the risk of some treasury operator who will take advantage of you and will rip you off. And this is what they do, unfortunately, sometimes. They do rip people off. So we have to make sure that to protect people from being ripped off, get informed first. Get educated on it, and make sure you've got tools that can help you calculate what the expected price of a bond you should be getting, so that when you're given that, you're able to now see it going forward. So that's the secondary market, where you can buy a bond at any given time from your bank. You don't have to wait for an auction. You can go to your bank directly, but having a calculator helps you, and using last auction prices also helps you. It helps you kind of get that agreed point. The commodities market, we did see that copper did start to bounce back a little bit. We're seeing copper back up above 8,100, mainly because of the debt deal that has been reached between Speaker McCarthy and Joe Biden. And now they're trying to push that into the market. We'll be talking about that later. We did see that oil did come down a little bit, down to 76.53, down by 0.55%. Obviously, worries are still looming about recession fears. And gold is up back to 1,964. So it's lingering around this 1,900 to 2,000, mainly because it does seem that there's some positivity starting to come on with this whole debt negotiation on the debt ceiling in the U.S. Remember that the threat is that the U.S. will run out of money by the 5th of June and will start defaulting on bonds if that is the case. Now, if the U.S. defaults on bonds, it gets downgraded. That has a rippling effect across financial markets across the world. So everybody's got their fingers crossed, including Zambia, who's trying to sort out debt deals with the West and also the East at the moment. Simultaneously, we did see that Bitcoin is up 3.9%. We did see that Bitcoin is up 3.9%, while we also saw that Ethereum is up 3.7% and gold is up 0.41%. So the wealth insurance assets are still playing the good role of being the defensive assets, with cryptocurrency up 78.1% year to date, but only up 1.79% over the last month. So you have to pay attention to how it's been doing recently. Ethereum up 6% over the last month and 6.45% year to date, while you've also got gold up 15.07% year to date, but up 7% on the last month. These are very volatile assets. That's why you keep them to a minimum. To anybody who's first joining me here, I always say keep them to a minimum. So if you look at our cross asset outlook, bonds are up 11.2%. They're now outpacing stocks, while stocks are only up 11% year to date, while dollars are up 7% year to date. In other words, they've just cleaned off. They've just now finally gone positive in terms of real, and 15.1% in terms of gold, which is 8.4% in real terms. Bitcoin up 78.1% year to date, while Ethereum up 68.5%. Remember, Bitcoin, USD, Ethereum, and dollars, these are highly volatile assets. Suggestions: you don't go beyond 15%. These are what we call wealth protection, wealth insurance assets. They should be limited to about 15% of your portfolio at best. Other thing that we're also looking at is in terms of one of the main stories that we did see, and I want to quickly jump to that OMCs do predict further declines in the diesel pump prices and also the petrol pump prices. Here's our outlook for petrol, down 1 kwacha, while the OMCs may be talking about 16, where we're seeing it somewhere around 1 kwacha, down 3.6%, mainly because Brent prices are trading in the 70s this whole month versus the 80s that were trading in the last month. Kwacha has actually slightly stronger this month than where it was last month on average, at least on the average point. And as a result, we probably will see some movement upwards. We probably will see a little bit of pressure upwards from there. But the biggest swing has been the global Brent price, which is down 9.29% from where it was last month. So we should be looking we could be looking at a push up, a push downwards further. That'll get us back into the 25. And if we do get diesel coming down, that puts a lot of pressure to bring prices down in inflation. Now, we've been tracking transport inflation versus diesel and petrol, and we found that the correlation between transport inflation and diesel prices is actually that diesel is actually a stronger indicator of transport prices. Now, it doesn't have an absolutely strong correlation, but it does have a stronger correlation. So we do see that diesel prices are currently diesel prices are about 41% correlated with the transport inflation, while petrol prices are only about 3% correlated. So the reality is that we only get about, we really need to look at diesel prices. So a 2 kwacha drop in potential diesel prices during this round will actually result in a lot less inflation. So if you want to try and look at containing inflation, the real one we should be battling is the diesel price, because the diesel price then leads to transport prices coming down, because most trucks that move food, that move goods, that move all sorts of things, they come down mainly because of transport costs that will come down. Now, I know you as an individual, your budget will get affected if the petrol price doesn't move fast enough, because that's your direct cost. But remember that the diesel price is filtered into more of the products that you consume, be it food products, clothing products, anything. Any product you're consuming, it's actually the diesel price that's affecting the cost of those things, because diesel is mostly used. And in fact, diesel is what's used to even transport petrol as well. So even petrol comes in a little bit cheaper in the next month because of lower diesel prices. So the priority is always to lower the diesel price as much as possible, because then that becomes the leading pull factor to the rest of the prices in the mix. So diesel actually has a stronger impact than petrol on inflation management. So trying to get the price of diesel down is actually much more effective than trying to get the price of directly petrol down. And I know that that may be counterintuitive to you as an individual, because that'll affect your personal transport costs. But bear in mind that, like I said, diesel is a much bigger factor. Looking at other stories in the mix, yesterday we did see that Kenya maintained its interest rate at 9.5% as it saw global inflation starting to slow down. Offshore investors also net sold 5.27 billion rand worth of stocks on the South African Stock Exchange last week, while we also saw, which is about $280 million, while we saw them net buy 9.68 billion rand worth of bonds. So it does look like investors offshore are rotating out of risk into safety assets coming into African countries. That is a positive signal that if we do get out of our debt situation, that's the appetite that's lingering and sitting for buying up our bonds. Oil in the oil markets yesterday, we saw President Maduro and Lula hit at the U.S. for sanctions on Venezuela. That's actually quite an important story. Oil edge is lower, obviously, because of debt limits deal optimism tempered by Fed rate concerns. We did see that gold also traded around 1,905, 1,950, based on the fact that there's the debt ceiling vote and the June Fed decision. And we're seeing hedge funds betting against copper for the first time in 3 years. The Republican speaker the Republicans actually speaking out against this debt ceiling deal, and investors did react timidly towards it. So let's get into some of the deep diving stories that we've seen, and they're not really local. Nigeria joins Kenya in removing unsustainable fuel subsidies. And I know we've been having this conversation about some of the countries out there that are utilizing fuel subsidies. Nigeria has actually said their newly sworn-in President Bola Tinubu actually declared that fuel subsidies are gone, which will hike up the price of refined oil. According to the data also in Nigeria of the Debt Management Office, debt has been sitting at about a record of $150 billion in Nigeria, and they've had to use 96% of their tax revenue to service ballooning debt obligations. This is making Nigeria unsustainable, meaning that the bulk of their budget has to be financed by borrowing, adding to the debt, adding to the borrowing costs, adding to the debt. So they're in a spiral at the moment. And part of the thing that's been fueling that is fuel subsidies. So they have to try and remove them now so that they can remove the obligations that are coming into there. And this is also the thing that we also have seen locally here as well. So Kenya also did the same thing where Ruto walked in and he had to remove those fuel subsidies because they were bankrupting Kenya as well. So the reality is Zambia used fuel subsidies straight after the election, had to get removed. Kenya used fuel subsidies into an election, straight after the election, had to get removed. Nigeria used fuel subsidies before an election, after the election, had to get removed. Hopefully you people will start to see the trends that fuel subsidies get used around election times, but then reality kicks in straight after the election that they have to be removed, especially when a new leader has to come in. The Naira lost 70% of its value against the dollar in 2015, and inflation is currently sitting at an 18-year high. So this is why fuel subsidies have to go in Nigeria. And this is a similar situation to what we were in. This is a similar situation to what Kenya was facing. So people see the trends, remove the emotions, see the data, see the trends, and that's the reality of what we have to keep in. Speaking of African output, we did see that UBA International did actually state that 50% of its earnings are actually coming from African countries. And this is an interesting story because it's actually showing the growth story of Africa. And we did see that the bank attributed to the growth in earnings to the activation of digital offerings and products across the board, enabling the subsidiaries to increase their market share in the region. Notwithstanding the impact of devaluation and double-digit inflation across the continent, we did see that the bank's subsidiaries are operating very well in financing development, infrastructure, and trade, infrastructure, and finance in the regional economy. So this is actually quite important because we often try to push for people from outside to come and invest in Africa when really we should be looking at Africans investing in Africa, because evidently it's showing that African investors have a better understanding of what's on the ground, and they can also withstand the high inflation that sometimes we face in the currency volatility. They tend to be able to get around this stuff, and they tend not to be too scared of that stuff quite easily. They're not scared when they see double-digit inflation because they've already dealt with it. Meanwhile, offshore investors get very frightened when they hear such stuff. So I think what also helps is these are regional investors making investments around the region. So it's actually quite important for us to take a look at. Republicans do speak out against the debt ceiling deal. A handful of hard right Republican lawmakers said on Monday that they would oppose the debt ceiling deal to raise the U.S. debt ceiling to $31.4 trillion. Backers do predict that it would clear Congress before the U.S. runs out of money on the 5th of June. But the 99-page bill does suspend the debt limit all the way through to 2025. 1st of January 2025. But there have been some main things that they did say, that there will be spending cuts in the future and spending caps in the future. This is a pretty much kick the can down the road dance that the US always does. It's not going to amount to anything. And finally, one of the stories that's coming out in the press in terms of the oil market is Venezuela and Brazil's president are excoriating the West for the oil sanction that they have put on Venezuela. Now, President Lula da Silva has said that they extremely exaggerated and they criticize the U.S. for denying the legitimacy of his fellow leftist Maduro, who considered by Washington an authoritarian leader who has not allowed free and fair elections. Now, this is important because one of the things that keeps oil prices elevated is the fact that Venezuelan oil is off the market. So if you're now getting pressure from Brazil to try and get these sanctions removed, and the move left now helps Brazil push this. Brazil does have some strong voice, and also with the BRICS nations coming back into the fold and now trying to unify, this actually might be another conversation to have. So this could actually affect oil going forward, because remember, we've been keeping Venezuelan oil off the market for a long time. So that's where we are in terms of some of the stories that we're looking at now. Let's take a break very quickly as we're waiting for as we get into our ad break. We will be back in a few minutes to get into the next part of the market. Right. So thank you very much for getting back with us. We shall be joined back by Vernon sometime soon. We now getting into, I think we got a question here from Chilufia Mulala, who has asked, what is the major difference between getting a bond on the primary market and on the secondary market? And the second question is, does one have an advantage over the other? There is the difference between getting from the secondary market and the primary market is just simply this. The primary market, whenever you go to a bond auction, there is a price agreed on that everybody gets at the bond auction. Nobody has an advantage over another. Everybody, it's a very democratic system, and everyone equally gets the same price. So once a price or a yield or an interest rate is agreed upon, then it's distributed to everybody, regardless of how big your investment is, as long as your investment was approved, as long as it met the pre-approved standards. Now, outside of a primary auction, you are at the mercy of the bank you're negotiating with, who can sell you the bond at whatever price they want. Okay, so they can sell you a bond at whatever price they want and whatever. So if you are ignorant of the price that is prevailing on the market, if you are ignorant to current market prices, especially on the secondary market, you are highly likely to go into a negotiation where a bank can literally undersell you. And they can sell you a bond with a very low interest rate because you don't know what they're selling you. So unfortunately, the secondary market does require. And secondly, if you sell your bonds on the secondary market, that is the potential to make a loss. Okay, so buying from the secondary market puts you at the discretion of the banks, where you can buy at a price higher than you get at the auction. Now, the advantage of the secondary market is that you can buy anytime. You don't have to wait for an auction date. You can buy anytime, no letters of guarantee needed, and so forth. However, the other component you also have to bear in mind whenever you're dealing with bonds, whenever you're dealing with bonds on the secondary market, is that a lot of the banks also have got added fees into them. So whenever they bid for you or anything can be traded, they can have some added fees into it. So it depends. Okay, so please look at the contracts that you're being offered. There may be some costs that may be added to it. They can add trading premiums. They kind of fit the costs of that trade into the actual price of the bond. They do quite a lot in this. So just be aware of everything and make sure and measure the transaction against going onto the primary market. This is why it's very important to be knowledgeable about bonds before you go into the secondary market, because your lack of knowledge will make you perish. The Bible does say, my people perish for a lack of knowledge. Please make sure that you do not become a victim of that. That is the first thing that you want to try and do. A bank is not a fiduciary. I think, please understand this. When a bank is trading a bond with you, they're not a fiduciary. They have no obligation to act in your best interest. They don't. Okay, especially when they're selling your bond, their bonds to you. They have no requirements to do that. Okay. And if you're looking for my email address, please go to my page. You'll find it right there. Our email address is attached there, and even one of the numbers to contact me on. Now, the one point I will tell you is that an advisor is a fiduciary, such as myself. We have an obligation to give you correct advice. We have an obligation by the rule of the actual Securities Act to give you correct advice. Okay, an advice that works in your best interest. While the institutions such as banks who are trading against you they're a counterparty to your transaction. They do not have an obligation to give you all the information. They do not have an obligation to do that. They're under no obligation. So always ask yourself, whenever I'm dealing with a financial asset, am I dealing with a fiduciary or am I dealing with somebody who's selling me something? It's a very important differentiation. Because if you don't recognize it, whether you're dealing with somebody who's working in your interest or working in their interest or the interest of their shareholders, you are going to find yourself in trouble. So you must ask yourself, whose interest is this person working in? Okay? Whose interest are they working in? All right? If they're working in their interest, then perhaps you need to make sure you get more information. If they're working in your interest by law, demand more information from them. But that one who's not a fiduciary does not have the ability to work in your best interest. So just ask yourself who you're dealing with in any transaction. This is why, even if you're going to invest in any asset, be it a mutual fund, this is why you're advised to go and deal through a financial consultant or a certified financial advisor to help you, because they are working in your best interest, or at least to guide you and say, yes, that one is good, that one is bad, this may not be a good one, because they... All right. Let's get into our chart of the day. Not sure if let's get into our chart of the day for today. And our chart of the day basically showing that one of the things we are seeing out here is that the labor market and the consumer index in the US. Now, this affects whether interest rates will go up or not. Remember, we've got a June Fed decision in coming up soon. But consumer sentiment at odds with a robust job growth. In other words, you're seeing that the sentiment of consumers to spend more. When consumer sentiment is low, they don't tend to spend as much in the economy. And when you're seeing the job market so strong and an unemployment rate that'll sit very low, one of the things you're trying to watch out for here is that the U.S. employment numbers here, the U.S. unemployment, the problem that you are seeing, which you have to be very careful of, is that if the U.S. unemployment to stay so low, there has to be someone buying. There has to be products that are being bought. Somebody has to be buying things. So if the consumers are weak, where's the employment growth coming from? Because strong consumers is what leads to strong employment growth. So I think this is where there is at odds with it, where these things might come crumbling down, because these things are pulling in different forms. And that's why you may start to see either a recession pick up eventually. And that's why it's saying bond yields remain capped in anticipation of a labor market rollover. So if the labor market starts to weaken, then you'll see the Federal Reserve start to pull down. So the weak consumer data is leading to the weak unemployment data, which will come in the future, which will then start to pull down the Federal Reserve from raising interest rates any further, and will probably have to stimulate the economy by dropping interest rates. And therefore, that's why American bond yields are starting to cap. And this is what the weakness in the data is starting to show us. And that's good for Zambia in the future, because then that'll bring a lot more of these investors to try and look abroad when they do start to have a stimulated economy and the Federal Reserve is at the pump stimulus. Those investors are going to have to start looking abroad in areas like Zambia should we get our debt resolved. So the topic of discussion today, Vernon, in the last 5 minutes, I want to talk about is money and happiness. Now, everybody rushes to an answer. Whenever we say, can money make you happy? I'll tell you this. Money, I think we have a misunderstanding of its role in life. Money is a stress reliever. It's a pain reliever. That's what it is. Okay? You throw it at things that bring you pain. If you're cold, money gives you a place to stay. Okay? If you're hungry, money puts food in your stomach. Okay? If you're bored, money can entertain you. Money is what we call a pain reliever, but it's not a happiness creator. So you have to know what you have to do with it. And you actually have to have a place where you can take it of meaning to you. Now, this is a chart that's actually come out of the Fidelity survey, where they actually survey millionaires on an annual basis. And they said, what are the top concerns of millionaires by categories? And Fidelity found that 60% of millionaires are worried about health. Okay, so if you want to enjoy your money, you have to actually deal with other factors of life: your health, your life, your finances, and your work. So you can have all this wealth in your life, but if these areas are not in good shape, you will struggle to enjoy your money. Think about it this way, Vernon. As I said, we had a conversation once in a health group I'm in my workout group, and one guy was giving us talk about dialysis, and he says, look, if you're on dialysis, you have to go to a hospital for 4 hours a day, have a tube stuck into your kidneys to wash out the blood that's there, and then re-enter it back in clean. For 4 hours, you have to lie there lifeless, still in pain, with tubes going through you, trying to clean out your kidneys because you didn't take care of your health when you were a kid. So the reality, or when you were younger. So the reality is, you've got millions, but now you have to spend money on dialysis, and you have to sit down there. You have to sit at a table every single day, just trying to get it done. Now, dialysis can be 50 kwacha if you're doing it in a public hospital where you have to sit and wait, and it can be thousands of kwacha per treatment if you're trying to do it at a private hospital. Already it's going to cost you money and it's going to cost you time. So we're talking about 4 hours sitting on the dialysis bed. What about if you're trying to do it at a public hospital where now you have to spend those 4 hours sitting there, and on top of that you have to spend hours waiting for your turn for your dialysis treatment? Okay, so you have to think about that. Can your wealth be enjoyed if you haven't taken care of your health? Think about your life. 32% of millionaires were worried about their life. 30% of millionaires were worried about their life in terms of their family, their emotions, their life experiences, the regrets they had. Did they get married or not? Did they have kids? Did they regret getting divorced? What are the things that really were hurting their hearts at that point? Then there was their finances. Yes, I'm rich, but I'm also in debt, or the costs that I have are high. I've got so much interest payments that are just chomping through all this wealth and all this income. And also their work life. 27% were worried about their work life. So there is a kind of equation you should be looking at. In fact, the top 5 concerns of the millionaire groups inside these surveys were: 1, my weight; 2, my health; 3, my family's health; 4, my social life; and 5, paying for healthcare, which is getting much more expensive. And the same thing you can say is even aspiring millionaires were asked: my weight, my family's health, my health. Have you noticed how these 3 are the top? Health-related issues are at the top. Your body's health. This is why Warren Buffett said, if I gave you one car in your life, and you had to drive only this car, you could pick whatever car. It can be the best car, and I'll give this to you. But you only have one. And he says that's your body. You're given this one vehicle to experience life with, to earn money, to enjoy things, but you have to take care of it. So if you were given a car, you'd probably take very good care of it. But because it's your body, you treat it like trash. And that's the number one concern when you do acquire wealth later on in your life, or you do finally build wealth later on in your life, you'll find has actually been your health. So that's why in our 20s and 30s, it really, really need to start being serious about the way we're taking care of ourselves. This party after party after party after party, you have to watch out for that, because it can catch up with you later on in life. all the decisions that you were making in your social life and in your health life. So here are some of the things I want you to think about as we wind up here. Now, obviously, the top part I've talked about is your wealth goals. Those are things that we will discuss later when we're going further into the building of the pyramid. But I want to start with your physical health goals. Being in physically good shape, that's important. Eating healthy, because a lot of the sicknesses in Zambia, the causes of death and disability have got to do with obesity, bad diets, sugar consumption, and alcohol consumption. These are the fastest growing causes of death and disability in Zambia, according to the 2009-2019 Washington Institute Health Metrics Survey of Zambia. Okay, so if you don't want to become a millionaire and now you're battling against death and disability, and all those millions are now going towards keeping you alive instead of you experiencing life. So chronic illnesses are the things you have to watch out for. The fastest growing causes of death in Zambia are chronic illnesses. It's your BP, stroke, it's your stroke, hypertension, ischemic heart disease. Okay, these are the main things. Cirrhosis. These are the main things that are causing the fastest growing death. So the fastest growing causes of death. So disabilities and that family health, making sure that health is not just a part of your life, but a part of your family. It's conversations we should be having, because your loved ones are your loved ones. When they get sick, you will open your wallet and take care of them. And seeking healthcare professionals and consultants. It may be a good idea to switch on social media, and instead of trying to figure out whose concert was for, perhaps follow some people on there who can teach you about health, and to make sure you're also making good health decisions, especially as guys. Now, I will go through some of these other ones tomorrow to talk about a wealthy life, but I wanted to introduce this holistic wealth equation to you, that it's important to have your wealth goals, but to also have all these other goals underneath so that you are enjoying your life. Okay, and I will be taking you through a survey that we kind of do, and we have it with weightings and everything to help people ask the question, what is the probability I will enjoy my money? So there's an actual percentage number that we come down to at the end of this that says, what is the probability I will enjoy my wealth if I attain it? And it's got to do with these 4 areas underneath your health, your wealth goals. And I wanted to end it there with one quote, which comes out here from which comes out from Spike Milligan, who says, "Money can't buy you happiness, but it does bring more pleasant forms of misery." So it does make you listen. I'll say this again, people. Having money is not everything, but not having it is. Okay, don't go and glorify yourself thinking poverty is the way to go. It's not. Okay, this is not an argument for poverty. This is just to tell you, don't overstate what money can do for your happiness. It is there to solve immediate problems. But happiness is a lot more to do with how you utilize your time and how well you've kept your health. Those are very important things. And I'll leave that there, Vernon. I don't know if you have any final thoughts before we go. Your microphone is off. Okay, I think we'll just check in tomorrow. Everyone have a wonderful day and God bless.